Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It is May 29th. This will be a chart lesson for today, and it was mostly downhill today. There's a lot of sideways action in this, really all morning. This is sideways, but in the bigger picture, there is a two-tiered channel working lower here, and there's some other shorter term stuff in and around in here. But once you understand what's going on in the big picture, then why you get these bounces like this, like from here to here, and then suddenly turning back down, and then bouncing up here, and then turning back down, it kind of starts to make sense once you see the big picture. And the whole idea is there's a channel working down here, and you've got a strong trend line right here, and it turned prices every time until it got to right here where you got a break, and prices kept trying to go higher, and suddenly they turn back down, which is what you would expect, because you would expect prices to try and make a new low here after a break of that trend line. And we end up getting another leg up, and we're working back down again now. Of course, we're into the next trading day, so we don't really care what happens at that point. Really, once 2 o'clock hit, unless you're managing a runner, you don't really care what happens anyway. We're probably not going to take any more trades after that. But knowing what's going on in the big picture could have really helped you here to know not to continue, not to try to get long in here. Once it starts chopping up and down, just sit tight, and then when you get the reversal type pattern, then you jump on and you can ride that down. And you did get a good setup there. So most of the trades are to the downside today because it was all downhill. Of course, there's enough room and from here to here that if you get a good trend going, you may want to take another entry. But let's back out, talk about the trades, and wrap today up. There's quite a few today, so it's going to probably take a few minutes to get through all this. This is where it gets a little tricky in here because it's really a lot sideways. But notice how we're making lower. We make a little, basically a double top, then a lower high, and then another double top, and we're not getting back up to the highs here after coming off the lows. So that makes it a little bit suspect. That leads you to believe that prices are probably going to break out and continue to trend lower. And what I would do at that point, I don't think I showed you this part, is that once we did continue lower, I would measure, you want to measure this first leg, which is so, and then you would look for your continuance from right there where you had that little failed break higher, and that gives you a measured leg. Of course, we bounced slightly before that. I mean, that's within a few ticks of being a perfect measured move. And so now you got 2 legs down, so you're probably going to get a correction, which you actually get 2 legs back up. Leg 1. And then from here you got leg 2. And you can see that's almost another perfect measured move. So these measured moves really help look for help you to know where prices are likely going and where they may end up. So always use those. I mean, nothing's 100%, and you don't want to make your trades based off those, but if you're in a trade and you're trying to figure out where prices are going, always keep that in the back of your head and consider that. So I guess that's the way I would leave that. But again, as I said, don't make your trading decisions based off of that. Just use that for an idea to know where prices are going, and then continue to read the price action like we normally teach it, because a lot of times I'll get an email and somebody will say, I saw this move and it looked like there was going to be a perfect measured move, and they took a trade based on that, and you don't want to do that. That's just to give you a general idea where your target should be, but you still have to read the price action properly and look for the proper setups at the right places, which are always the key entry points for the most part. So don't get lost and confused there, because that will definitely that'll definitely be a problem for you. But anyway, let's talk about the trades. There's a failed second entry long right here. This is 7 o'clock, came right in this little area right here, and notice you got a new high and then a first entry and then a second entry, and it failed. We're not quite back down to the lows. We did have a failed breakout, which means prices could continue on. So as long as you got enough room to get out here back before these previous lows across here, I'd probably be all right with that trade. I wouldn't use this for my new low because that's a failed break lower. I would use um, where you'd had it previously, and you just want to make sure you got enough room to get through there. So um, you actually get another failure to go higher, but you get a much lower entry this time. And actually, this line, I probably would have moved it up a little bit to where that one bounced right there. And that's where you tend to get the most touches now, right across there. Um, so past that one, I don't think I would enter short again there. You might consider going long here, but the problem is you've got this pretty strong trend down. You got a break, and you don't quite have a new low. Um, although this has been strong support. So this is a possibility because you could look at this as a double test as well. And on my chart, that's a nice bullish bar. Only problem is everything's below the EMA, and you may get turned back down right there. But it does meet our criteria. It's just a little risky because the downtrend is still in play really at this point, and you'd be counter trend trading, and that can, I mean, just consider if you'd done that here, you'd have got burned, and that could happen again right here. So you got to be careful with those, but it is, you know, if you're trading range rules across here, that's a good trade. So I will mark it green. And of course, we run back up. You get a close outside a new high. This is really your signal bar, though, the green bar. Let me back out a little more. It's too bullish. Wait on a lower high, which comes right here. And again, you do have enough room, and you do have that lower double top that's lower than that high and that high. And that's a sign this thing may be getting weaker, especially when this one comes up. So you would expect to at least get another leg down, similar to this one. You may find support here. It may not be quite as big, but you still got plenty of room. And that's a good, nice bearish bar. Then you actually come up again and make another double top, and it actually broke higher and turned and went out the other side. I like having a sell stop one tick below that bullish bar if it breaks lower, which it does, and then off it goes. And you would have caught a nice runner there. And again, I showed you where to look for your measured move, which puts prices way on down there. So I don't. Let's just back out again so we can see it. I might have already deleted it, but anyway, then it started back down again here. So, but you don't know that it's not starting from right here at this point. So you may be able to ride that all the way down. So that was kind of the point I wanted to show you there. But let me back out again. But we do break on out. There is a little breakout pullback short here. I'd stay away from that. Even though it works, you don't want to be entering down here in that support and stuff. And you would have needed to probably move this down to at least right along here by that point. You might have had it a little higher right here. And that is another failed break lower. But with making these lower lows and lower highs, and that is a second entry long right there. But when this one couldn't break above and you got a 2-bar matching high, that's just really, I'd skip that one. And of course, she bounced back up, and then we already talked about that. It broke higher and turned and went out the other side. There is that little breakout pullback short. Skip that. There is a higher low here too as well, but there's a lot of congestion right there. But what you have to understand is why is there congestion there? Because there's a shorter term blue 2-tiered channel working down through here, and we just bounced off of it. And then you made a higher low, and you're a long way away from the EMA too, so you're probably headed back there. But because of the congestion, it's always questionable. But here's something I want to make sure you understand is the reason there's congestion is the selling is still strong, but we've already we're kind of reaching a strong support area. So that's why the congestion, there's just it's like a equilibrium point before the buyers overtake the sellers, and that's what's starting to happen there. And that's generally what causes, there's two things that'll usually cause congestion. One is indecision. The market's not sure where it's going or what it wants to do, and you just don't have anybody that's really the buyers aren't really convinced and the sellers aren't really convinced, and you just got equilibrium there. But sometimes you start to get equilibrium at turning points. So you will see these congestion areas at turning points. And what you'd probably have to realize here is that since we're so far away from the EMA and you're finding congestion, it's probably going to break that direction instead of breaking this direction. Like I said, anything can always happen. You could actually break down here and trade down here to this red line, brown line, whatever you want to call it, in reverse, and then snap back. But the odds are you're probably going to snap back right here on this higher low. But I'm not that crazy about that congestion, so I didn't mark it because it definitely leaves a question mark there. But we run up, and it looked like we were going to get a nice second entry short, but we didn't, and it turns up, and it goes right back up here, and you get your first break of the blue trend line, and you get a big bearish bar. So now you got this trend working up. You get a close outside, new high, bearish bar, a good bit away from the EMA. I like entering right there. Generally, you'd like to wait on the lower high, but you don't get one to way down here. And I'm a little leery of entering down here. That one is a possibility, but it's right into that midline. You do have to consider the red channel as the bigger one, but you probably didn't really have this red channel in place yet. You're probably just playing the blue channel. And because you really don't have enough evidence to prove out that red one just yet. So you probably wouldn't be looking at that midline. You would just be looking at this as the first break of this blue trend line. And this is basically a double bottom too, so you could consider that, hey, this is two legs up. You move up, you correct, you move up. You don't see the breaks there or whatever, so don't get confused by me saying you could look at that as a second entry. But just being that far away from the EMA after this trend line is played out, I like that one. And you may take this one. I'm not crazy about it, but you may take it. It's still inside a key entry. That is a key entry point. It's working down through there. I'm going to still mark it green. I just like to see a little more correction than that. That's not really a good correction, but you could have trapped some people there all the same. And then, of course, you get a bounce. And this is your two legs down, really. You get one leg here and then second one. And this is really like it's almost a perfect repeat pattern of this right here. Notice the big move down and then the little jog there with the higher low. The higher low looks a little like congestion. So you may take that one based on that if you saw that. Two legs down in a repeat pattern. And we bounce there. And then we just get in another little range. And this one's almost so tight. You just, the overall trend is still down. So it's really risky trying to get long here. That's about the only setup I see possible. I don't see any good short setups here. And I really don't see any way that I'd want to get long here except for maybe right here. And again, this is your signal bar. So this is just an inside bar, which always makes it suspect. It is a second entry. Notice that high, pull back first entry and then come down. And when it broke higher, second entry there. And notice what happens. It breaks higher, trades up, and comes all the way back down before it bounces. It's just bouncing up and down in that range. So I'm not crazy about that. I think you have to skip it. You can't enter this one right into the resistance. But it does take off. And it comes all the way back up here. And where does it turn down? Right at this trend line. Let me back out a little bit here. I didn't mean to back out that far, really. But it turns back down right here. The only reason I don't like going short right here is because this trend line's still in play, and you haven't really confirmed this. You could say this is two swings, and this really confirms it, but I think you need another one, and that doesn't come till right here. So that's really where this pattern gets confirmed. So I wouldn't take that option here. I'd wait on a lower high, which comes right here. Notice you move down, you bounce back, it breaks higher, turns down right off the EMA and breaks out the other side. And then you get another little jog up. And this is actually a failed second entry long here because there's a new high, first entry, second entry. And then you actually jog up again on like a little breakout pullback short right there. And you get another big bearish bar. And this is coming off right off the trend line too there. So you might enter that one I marked it green. It's not as good a setup because really you've already had a failed second entry long here, although you could count this as a new high and a first entry, second entry. But the problem is you're just going low right there. I mean, you're going short right there into a low, and that's generally not a good idea. You do have room to get down here to this trend line, and then you can't go short in here because you're right at this trend line, and it could bounce any moment. It actually moves a little lower here before it bounces. And notice you got a second entry here, and this actually, I can't remember if this went lower first or not. I believe it did, but I wouldn't swear to that. Doesn't matter. You could have just waited till this ended and put a buy stop right there, because now you got a break, a new low, and you got a hugely bearish bar, or bullish bar here, a little bit away from the EMA. So you may take that one, and then you come back here and you get a little double test. As long as you got enough room to get out here, you may take this. But we traded down into this, so the odds are we're probably going to, and there is a bigger pattern here that looks like that we're going lower. So I marked this one green just basically because it's a second entry. Notice that high, pull back first entry, pull back second entry. But again, this is an inside bar, but it's a really bullish bar, and there is enough, just about enough room right there. It didn't matter, it broke higher, but you don't know that that's going to happen. You don't know that it won't turn down just like it did every other time it's come back up there. It's just risky. And the better play was to wait and let this break out, and it turned down right off that key entry point. And that's a big bearish bar. I like that one. And if you catch that one trade late, around 10 o'clock or so, late in the morning, you can ride that all the way down. And you actually get a little failed second entry long here on a breakout pullback short. And the only reason I like that one is because it's a failed second entry long as well. And off it goes. And you would be wanting to, look for this measured move here at a minimum. And you can see that's where we started finding some buying. It's funny how that works out. But there's also that midline, and notice prices are kind of testing that midline and trying to get back over to this trend line right here. And this trend line was fairly easy to know where it was going to be because that was obvious right there. You could draw that and just drag it back to the top. And when prices finally got there, now they take off again. And that's why we like those key entry points. If you look where all the big moves generally start at, they're at key entry points. And look at it go again. And again, I would have measured this leg and then measured another one. And so you got two measured legs down to the tick, no less. So generally I would want a better signal bar right here. But notice that low, first entry, second entry, plus you got a little support area right there, and you get that failed break higher. So I like entering. I wouldn't use that, but once this one turned down right there off that key entry point, that bearish, I wouldn't mind entering there, especially when it's got a lower low than this one. Even though it has a lower high, if anything, you might let it break lower and drop your limit order back there one tick below this bar. But I wouldn't have a problem just getting in there on a buy stop on that second entry right off that key entry point and the EMA too. Especially knowing that prices are probably looking to come down here. And here's another great trade. This one would have a runner, this one would have a runner. And then we bounce down here right off the lower end, perfect measured, equal distance measurement from the midline in this one. You get a reversal pattern, but it's not a good one because it's below the EMA, and so I don't like that one. I mean, it's one you could argue for because you did just come off the low, and we're probably going at least back to the midline, but probably all the way back up here. But I'd want to wait and get above the EMA, and of course we do. We rock it off. You get a second entry here, but it's not a very good signal bar. But when you break out, get that little trap lower and then turn and go back, I like going long right there above that, figuring that you were going to take on off. But guess what? Here's something else you have to be careful of. You're going into that EMA, so usually it'll push through and come back and test it just like it did here. And then you get a failed second entry short as well, because look at that low. First entry, second entry, and it reverses. So that's really the better place. And now look, it actually takes off. It doesn't go that far like you would think it is, but that's still a pretty nice move there compared to these first couple of moves. And then we actually come back and test that midline one more time and then rock it up. And look at it go this time. And again, you just get a little trading range right here. I don't have the lines drawn, but you're just kind of going sideways and you drop out of there, test that EMA, and it gives you a second entry long. It's not a perfect second entry, but notice that high first entry, and then it drops a little further second entry. And notice how many times we tested that midline. 3 bars there to the tick. And that's a relatively bullish bar on the second entry. I like it. And this one's another runner here, takes off. This was really kind of a funny day because you would just get stuck and then all of a sudden it'd take off. And when it did take off, it was like a rocket. But where did it take off from? Another key entry point of midline. And then we finally get a break, and you would think we're going to try to go lower here, but when this second entry short failed right here and turned up, you may go long right there. You might have gotten shaken out when it starts coming back, but it pushed on up and would have worked. But you're better off not to be trying to get long up here, to be honest with you. The only reason I like that one is because it looks like a reversal pattern, and you may get another leg up like this one, or even from here to here. But once it doesn't go anywhere, just sit tight, and then all of a sudden you get a reversal pattern back to the downside. Notice that high first entry, drop down, you get a second entry right there, and it barely goes one tick and then turns and goes out the other side. That's generally a good sign that we're going lower. And if you didn't like that, when you get a second entry short right here that confirms the trend line just a few minutes later with it actually broke higher and turned and came out the low side. And once again, once that trend line was confirmed, and you got you're coming off a key entry point with a big bearish bar. Look at it go. So you only had to catch 1 or 2 of these to really make some good money today, and that takes you into the 2 o'clock hour basically. So, but most people would look at this day and say this is a really hard day. But if you can see the big picture and you know that this 2-tier channel is working lower here, and you wouldn't have got it confirmed until a little after 10 o'clock. But once that's confirmed, you know what prices are doing. You know where they're probably going right here. And then when they head back, you know they're coming back to here. They end up going a little higher. But even once they break out here, you would expect, hey, we're probably going to try to make a new low. And so it doesn't surprise you that they start trading down again. What really surprised me was when we broke higher again here. So, but you would really almost could look at this as a range type day, and this being failed break lower, and then we tried to get back in the range, which we actually pretty much did close back inside this same trading range area right across here. And there is a gap on the daily that, here's where we opened, the yellow line at 8:30. This is where we closed yesterday. So there's a gap up there, and it's still there at this point. So those gaps don't stay there very long. So we may try to fill it in the morning. So be aware of that. But anyway, pretty good trading day. Large number of trades here, mostly all to the downside for the obvious reason that there's a downtrend. There is a lot of sideways action in here too. So you can find ways to trade this both ways, but generally you're better off to stay with the trend if you can. And anyway, not much else we can say about today. I'm going to wrap it up. We'll be back again tomorrow and wrap up our week. I can't believe we've already, when you get a holiday on Monday, it makes the week really short. So we're almost done with this week. Tomorrow I'll wrap it up. Anyway, I'm going to be done. I'm done for today. I'll be back tomorrow. This is Mac with PriceActionTradingSystem.com. And we'll see you next time.